Hello, welcome back to my lessons, and today I will show you some definition in forex trading. Is a pips is a lot leverage, and I will guide you how to calculate the risk by your percent of your account. And the first one is what is a pips? Normally you will see some exchange rate like the Euro USD with some numbers like this 1.16543, and you need to remember some of the key thing about the pips. Normally we will have the two types of exchange rate. The first one is have the 5 decimals, and the second one is have 3 decimals. Which one is have 5 and which one is have 3 based on your main currency. For example, your main currency is USD or some currency like Swiss franc, Canadian dollar, New Zealand dollars. Each we will have the 5 decimals. And in case your main currency is GBY, in this case exchange rate will be have the 3 decimal beside of the 0, besides of the number. And you can see here is the exchange rate. And the last number, the red number is a point. And the next one, green number is a pips. It means that pips equal 10 points. And some of the broker will be right with the point value smaller and on the top of the exchange rate. They will show you that will be easy to you to understand about the small number is a point and green number, 4 number is a pips, to be easy to see. And you can see here is the exchange rate that on the trading view, and trading view also show you like this type to be easy to understand which one is a pips. And pips normally will be used to calculate the price movement in the market. For example, here is a price chart you can see here, and when the price movement now sharply like this, you can calculate how many pips price move. So let's see, I will calculate here, and this candle show you that in the 1 hour's price down 15 pips. This is the function of the pips, and the next one you can calculate how many pips you get in one trade. For example, you buy the Euro USD at the price is 1.16543, and you will take profits at the price is 1.16843, and your profits will be the take profits right and minus buy price, and you will have a profits by pip is 30 pips. And how to change the 30 pips to the money? You need to understand about the lot to changes. So what is lot? Lot will be equal to 100,000 money units. For example, you wanna buy 0.01 lot of Euro USD. It means that at this time you buy 1,000 euro using USD, because at this time the exchange rate is Euro USD, and it means that you using USD to have the euro, and the quantity of the euro will be equal to your loss multiple to 100,000. So our result is 1,000 euro. How many money do you need to have to buy the 1,000 euros? And I will calculate to you. And here is the exchange rate. For example, is 1.16543. And if you want to buy 1,000 euro, you need to use 1,000 euro multiple to the exchange rate. So the result is 1,165.43 USD. It means that you need to use euro to the exchange rate to have the final result, final quantity of USD you need to use. But at this time, your account will only have $200. How can you buy the more than 1,000 euro? The very useful thing in the forex market is leverage. Leverage like the levers. It means that you can scale up your money a lot. For example, in some of the first broker will be have a lot of the leverage level like 10 times, 30 times, 50 times, 200 times, until 2,000 times. Is very, very big to your money. And one more thing I want to say in this lesson, on the euro permission, a euro broker only need to allow you to leverage. Using leverage is 30 times, but some of the broker in the world not relate to the eurozone, therefore they can bring you a lot of the leverage levels you can choose. But I highly recommend for the new traders and also the old trader only trading with the 200 times and up to the 500 times is enough for you to trade. Don't use any the highest leverage, because the highest leverage is a very risk. You can earn more the money in the market, but actually you also can lose more money. All the The leverage, you can say it lies a double as worse. It can hurt you and you also can protect you. Explain more about the lot for you and about the leverage and the lot. For example, if your account only has $1,000 and you're using the leverage is 200 times, it means that your account will be equal to $200,000 after using the leverage or using the loans from your brokers. Maximums, you can buy or sell 2 lots USD, and if change to the euro, you can buy the 1.72 euro. And how to calculate? You can calculate by using your money in your account after using the leverage. Divide to the one loss value is 100,000 units and divide to the exchange rate. You will have the maximum euro you can buy after when you're using the leverage and deposit money in your account. And the next one is very important, how to calculate pips to the USD. And for example, for your account still have the $1,000 and leverage is still be 200 times, and you have the profit. When the trading the Euro USD is 30 pips when you're buying one lot, and you need to remember the exchange table, like one lot will be equal to $10 if you have a profit is 1 pips. 0.1 lot and profit is 1 pips, you will have the $1, and 0.01 and profit is 1 pips, you will have the $0.1. If you're trading on the currency, have the main currency is USD. Therefore, on this case, you will have the profit. In last case, you will have the profit is 30 pips multiple to tens if you're trading on loss, and you will have the profit is $300. And for the case you're trading in the some main money is a GPY, you need to exchange from USD to the GPY by using the exchange rate. Therefore, one loss for 1 pips might be equal to the 8.6 USD. Is lower than you when you're trading on some currency has the main money USD. This is very important when you're choosing the which currency to trade. And the last one, the key thing you need to understand, you need to remember when you learn about some definition on the forex. On the pips, when you're trading, you need to stop out and take profit by pips values, because all of the price movement can be calculated by the pips, not calculated by the USD. And one more thing, the take profits to entry and from the entry to stop loss, need to set the ratio very high, like 3 times. Normally, I recommend you set it. This ratio is bigger than 2.5 times, but normally 3 times is beautiful values for the reward per risk ratio. It means that 1 win trade can cover 3 loss trade. It's a successful system for professional traders. And one more thing is, every stop loss need to be fixed from 8 to 20 pips. And about the lot can use to calculate risk by your account. For example, you wanna control your risk. Maximum is 2% of your account, and you need to calculate how many lot you need to entry for this case. And example, your account is $1,000 and leverage is 200 times, and so stop loss is a maximum 20 pips at our standards. And to calculate how many lot you need to trade on 8 orders, you need to use formulas like this. The lot needed will be equal to the risk percent multiple to total patterns and divide to the stop loss by pips and multiple to the dollar per pips if you buy on lot. And when you apply this formula, you can calculate this time you need to trade with a 0.1 lot per trade. And for example, for the new trader, I recommend you only trade with a 0.01 loss to practice, because this is a very small loss. You can practice, you can have the feeling about the market's movement, and when you have a more experience, you can increasing the lot size to have to earn more money. But when you're new traders, everything is new. You need to minimum your losses. And the leverage is very important. You need to remember about the margin levels, and margin level will be calculated by your equity device to users margins or usage loans multiple to 100%. And what is the balance and what's the equity? Your balance is your money after the one trade is closed, and equity will be your balance when the one trade is still opening. Therefore, your margin level will be up or will be down when your trade is still opening. Therefore, when your margin level is less than 100%, it means that your account is very near margin call. Margin call means that your account need to pay your loans or your margins to the brokers because broker will not permit you to over the margin levels. And here is the example. The preference when you trading on Summers broker. Here we have a Summers value is balanced, is equivalent, and margin levels. Here is a very important thing you need to understand how many money you have in your account will be its balance, and how about your money also plus the opening trade is your equivalent and margin level over here. You need to very carefully see about this percentage. And this is all about the lesson today. Thank you very much and see you in the lessons.